I have no idea should I go for the same thing again because sudden load shedding, fucking load shedding is killing me. No idea what to say. But you guys just let me know what should I do. Should I continue this right now or should I wait for another session something? Maybe I'll be able to finish it before 9:30. So just let me know what should I do. Hey Mahdi. Man, what a sudden kind of load shedding are just what to say, I don't know. We have lost your stream for 15 minutes. Yes, man, just a load shedding. Nothing to do. Okay, it was just an unfortunate load shedding. Okay, let me go and yeah, we'll see how far we can go. Okay, those people who will join me later, maybe they will be able to watch it later. So I would love to start exactly from where I finished. Okay, so that was the TGIF for the previous week candle. 20% of that weekly candle is called the TGIF line, 20 and 30%. If the body doesn't close, the market doesn't close in between these two lines by Friday, you have to mark these two lines by Monday and Tuesday. And when it will trade this line, that means the TGIF is done. But you have to leave them open until Wednesday. Around the Wednesday, you can leave them. Okay, you can delete them from your chart. Even if it has been traded, even if it didn't trade it. Whatever it is, I don't care, but it should be removed by Wednesday. It will be traded, okay. It didn't trade, okay. But it should be removed by Wednesday. There is nothing called TGIF by Wednesday. If it is done by Friday, you don't need to mark that TGIF line at all because it doesn't have any value in that type of situation. So this is from the weekly chart, and you can see that by Monday it has traded the TGIF line, which is here. By Tuesday also it has traded the TGIF line, which is the 20%. When I will be in 1 minute chart, you will be able to see these two lines, which is the purple color, if I'm not wrong. So don't get confused because there will be a lot other lines as well. So these two purple line, which is the bold, is the TGIF line. Now I'm coming to daily chart. So this is the daily chart. We have marked the standard deviation line. One is here, one is there, and this one is -2 standard deviation, which has a low priority comparison to these two, one minus 1.5 and minus 2.5, but it can give some kind of reaction from there. I have no idea it will give me that or not, but I have to keep that on my chart. While the candle has closed above the minus 1.5 standard deviation, there can't be any kind of fake breakout. It has closed means it is going to trade the next TGIF line, which is over here. Sometimes it retraced or reversed from -2, which I really don't care at all. If it happened, then maybe as an hindsight, I will say, okay, it has been rejected from there. But my intention to see this market will reach until -2.5 standard deviation. So when I will go to the 1 minute chart, you'll be able to see this line as well, which is the blue line. And it remember that is -1.5 standard deviation. This is the premium week. You can see the candle is the premium week from that from the daily chart. And if you have watched ICT's yesterday's video, which ICT has uploaded, you will be able to see that ICT has marked that week premium as well. But I have marked it before him. Okay, by the way, I was looking for that on in that specific day, if you remember. But ICT in his last video, he has marked it, so he has confirmed that I was not doing something wrong. I'm studying this quadrant level, weak quadrant level, fair value gap quadrant level by watching ICT's video. So that depending on that information, I have marked that on. And when ICT by his last video, which he has uploaded last night, he has marked this week 50%. I'm very happy to see that I'm not doing something wrong. Instead, I'm doing something very correct way. Okay. So in the lower time frame, you'll be able to see these lines as well, which is also from the that premium week, the quadrant level. So black line is the 75%. I have to keep it like this way. The black line is the 75%, which is called the upper quadrant. Red line is the 50% and the low is the 25%. This candle closed above this candle, then this market, which is from Monday, trade until the 50% of that premium week, then it went higher. Tuesday, this market came back again, trade the upper quadrant, which is 75%, and then it has been rejected. At the same time, you can see this -1.5 standard deviation. Please don't get confused. This blue line is -1.5 standard deviation. These lines are the how to say, the premium week quadrant level, and this is the TGIF line. Now I am going to remove this TGIF line because I don't need them anymore, so it will be like just this thing over here. This minus 1.5 standard deviation, either it has to be reacted as a resistance or it has to be reacted as a support. As you can see, this body has closed out this, then the body are respecting this line. Okay, it's not a very random line. We have marked that minus 1.5 standard deviation, and you can see how beautifully it is respecting this line. The bodies are respecting this line from the daily chart because these lines are marked from the daily chart. So here, two things, don't forget: minus 1.5 standard deviation, upper quadrant of the premium week, 50% of the premium week. I'm coming to hourly chart. This is the hourly chart, and we have talked about all of these things, and this was that discount week, quadrant levels over there. We have seen that how beautifully it has been traded. The upper quadrant of that week, then it went higher. After went higher, remember this is that minus 1.5 upper quadrant, 50% lower quadrant of the daily premium week. Monday, market used that 50% as a support. Tuesday, it came to the upper quadrant. How beautifully it came over here. So beautifully it came here. Now let's talk about the price action from yesterday. It was the price around 9:30 around here. It was the price around this area. We had this buy side liquidity. We had this sell side liquidity. So I told that until this sell side liquidity is not clear, I'm not looking for any kind of buying opportunity. When this will be cleared, I will only look for the buying opportunity. No sell is valid to me. It can be reversed from this gap, it can be reversed from this gap, or it can be reversed from this gap, which is the last variable gap from the hourly chart. Everything I told very clearly. I don't know which gap will hold the market and set the market higher. At the same time, when it will keep falling, I will keep looking for the buying opportunity. Whenever I will find my first 22 bullish model, I will take that buy, and I will believe that model will give me my boom. Okay, that was my intention yesterday. That buy side liquidity is still over. The sell side liquidity has been cleared. Then market fall by Powell came until that upper quadrant from the premium week. Remember the premium week, as well as from the daily chart, respected this minus 1.5 standard deviation. This last parallel gap from the hourly chart is still holding the market. One candle closed below this gap. The very next candle closed inside this gap, which is called the fake breakout. Why this fake breakout happened over there, we'll talk about that as well. Okay, don't worry about that as well. So this is that gap I was watching. It should not be broken. This market can reverse from this gap. So until now, whatever I told you, is there any confusion? I think it's absolutely clear to all of you guys. If you have any confusion, let me know that, because when I will go to the next time frame, it's gonna be disaster. The real price action or deeper learning is coming from the 1 minute chart. So until now, whatever I have explained around this area, anybody has any kind of confusion or not, just let me know that. Please reply to me as fast as possible, because I have to finish it before 9:30. I'll try to go a bit faster because of the load shedding. Hey Jinshit, Gulnok Safa. Okay, good morning, Dimmer. Good. Did you guys understand whatever I explained until now? Because this is very simple, right? All the lines are over here, and you just got all the line. Okay, just me. Good, clear. It's clear. Yes, thank you. So now I'm going to 15-minute chart. Just remember this last parallel gap, which are our expectation. It can maximum fall until this hourly last parallel gap before reversing. Now I'm coming to 15-minute chart. This is the 15-minute chart. That buy side liquidity is still over there. That minus 2 standard deviation is over here. This is that minus 1.5 standard deviation around this area. You have seen that how beautifully it has been reacted from there. This is the upper quadrant of that premium week of the daily candle. That is the upper week. I had the last fair value gap around this area. This is the 15-minute last fair value gap to that specific leg. This leg started from here and finished here. This is the last fair value gap. There is no other fair value gap below this fair value gap. Okay, this is the last fair value gap. So this fair value gap is the last fair value gap that is holding the market. So you have seen there is a fake breakout which is below the hourly last fair value gap. The fake breakout actually came until the 15-minute last fair value gap. If I come around this area, over all of this area where market has traded, how this market actually worked. First, it has built the SMT, traded the breaker block around this area. This was the last parabolic gap from 15-minute chart. Trade that 15-minute last parabolic gap, breaker block, reach until here, didn't touch this minus 1.5 standard deviation. Fall again, trade the order block mean threshold over here, the 50-minute order block mean threshold, how beautifully it has been traded, as well as it has traded that discount week from the hourly chart. Upper quadrant went higher, left that gap open. That is the sign that I am extremely bullish. After order block has been traded, you will always expect some kind of unfilled gap. That is that unfilled gap. Either way, this is the last parabolic gap, but it is also the unfilled gap. Until this is unfilled, this is an extremely bullish market. Went higher, left another last parabolic gap from the 15-minute chart, come back again to this last parabolic gap. Instead of that, it has traded this order block by using the daily new day opening gap. If you remember, it has traded the new day opening gap. That order block has been traded here tick by tick to that last parabolic gap. This is the order block. Market has traded, failed to tap the 50% of the mean threshold of that order block just for 3 handle, then went higher. All of this price action is previously. I'm talking here now. This is that 15-minute last parabolic gap. So yesterday I was talking that this market will go higher, but before going higher, it can fall as long as it wants. But my intention was that hourly last parabolic gap, if I break it down to 15-minute chart, this is the 15-minute last parabolic gap, as well as upper quadrant, as well as minus 1.5 standard deviation order block. This market fall here, trade that 15-minute last fair value gap, then it went higher. What I'm looking for in that specific day, only buy, no sell is valid. So you are saying all of this sell we are going to let them go. Of course you have to let this go, but ICT told that there is a very nice selling opportunity. Okay, if you are ICT, then you can go for that, but I would love to work with the context. Here the context is market is bullish, it can fall maximum to this line. This is the maximum line. If it is broken, that means this market is coming here. Everything is going to be broken and market is coming over there, which is the unfilled gap, and maybe market will fall a bit more. I have no idea, but if this is broken, it will keep falling. Trade that 50-minute last fair value gap. This is a wick which has been marked over here from my 15-minute chart. Okay, now I would love to talk about that wick a bit, so that later you are not going to get confused for when I'll be on one minute chart. So here this 15-minute chart, I hope that you guys got the the gap where exactly it come from. Upper quadrant, look at the bodies, how beautifully it is respecting this line. This candle over here, okay, this candle went higher, trade that minus 1.5 standard deviation. It opened there, fall, come until to the top of this 15-minute fair value gap. I'll talk about this after a bit when I'll be on 1 minute check how it has been traded over here. But right now I would love to talk around this area. Tap to this high, exactly went until minus 1.5 standard deviation, then closed exactly over there. Then the very next candle, sorry, here, closed here. The very next candle open exactly over there, just fall a bit, went exactly to the high of this candle, closed exactly over there. This is a candle which is called immediate rebalance. That means all the buyers and sellers was here. Okay, everyone was here. There was no inefficiency, there was nothing. But either way, this week is an inefficient week. Okay, week is always an inefficient. That means it's kind of a gap. This whole week is a gap. When this body has perfectly repriced all of this gap, then this gap can be used as an inverse gap. What is the gap? This week is the gap. To the top of this week to the bottom to the week, this whole week is a gap. This candle has perfectly gave the buy side delivery. There is no sell side delivery. This gap is important to me. That is why I have marked as well this week 50 per, I mean the quadrant level. I'm studying this quadrant level according to ICT's concepts. I believe that later one day ICT is also going to mark the same thing. The way he has marked the daily premium week 50%. I mean premium week quadrant level. He will mark the same thing over here. I have marked it. Why it is important? It will be clear when I'll be in 1 minute chat. Just right now, you have to see that this is that week which has perfectly respected this line, and that line is a immediate rebalance, as a gap. Next candle has provide me with only the buy side delivery, tick by tick, the same thing. And then I need the sell side delivery over here. The sell side delivery doesn't need to fill all the gap. It can maximum fall here. You can see later it came actually until that area, upper quadrant of that wick, and then went higher. I didn't see that actually. I just saw it right now. I was here. I until that candle I was here. So later it has traded this line. I really didn't know that, but it traded the 50%. That was my interest to talk about, but later we'll add this one as well. From 15-minute chart, this is the quadrant level, just don't forget about that. And this is the upper quadrant level from the daily premium week. Now let's talk about this 15-minute last fair value gap as well. Okay, this is the 15-minute last fair value gap. Let's talk about that. First, this market is falling, right? This is a falling market, falling market, falling market, falling market. And finally, it came. Look at the bodies. I mean, look at the low. How beautifully it has been respected the low of that 15-minute fair value gap. Okay, the 15-minute fair value gap low has been traded over here. Then it has been used the high of this. Sorry, not the high actually. It has been respect the 50% of that 15-minute last fair value gap. Low rejection, 50% rejection, top rejection. You can also use them as the top rejection if you want. There is nothing wrong because the body has been respected the top. Here body the wick respected the low. Here the wick respected the high. Here the body has closed below the high, above the low, closed in between 50% and the high. Wick respected the 50%. So this is the area where market has first respected the low, then constant crossment, finally to the top of this gap, and then boom, market went higher. I'm coming to the 1 minute chart now. Everything is gonna be disaster right now. Make sure that you guys are not getting confused. On my right hand side, this is that 15-minute, same 15-minute chart. You remember the immediate rebalance week quadrant level, upper quadrant level from the premium week from the daily chart, last fair value gap, order block from 15-minute chart, minus 1.5 standard deviation from daily chart. This is the new week opening gap. This let me actually show you the last fair value gap as well, so that later you will get the points. This is the 15-minute last fair value gap. I added that very small area with the last fair value gap. So this is the last fair value gap from the 15-minute chart, and now I'm coming to 1 minute chart. So this gap is the 15-minute last fair value gap. This is the starting from yesterday's AM session. First, we expected this market will fall. When it has fallen, it left that clean highs over there. Okay, so you can see this is the clean buy side liquidity over here. Here is the clean buy side liquidity. Here is the clean buy side liquidity. As you can see here, very nice buy side liquidity. Market left the buy side liquidity around this area. Then market fall. When this market has fallen, there was a 15-minute last fair value gap from that specific leg. Finally, we have found that market structure shift around the morning session. If you don't remember, I mean, if you forgot, that was the clean highs. Okay, tick by tick clean highs. I told that market never leave this type of clean highs. Market came here, 15-minute bullish fair value gap. That is a perfect market structure shift. Yesterday, one of my brother, he actually asked me, brother, why that swing high is valid for shifting market structure? Because it didn't trade any fair value gap. This week has traded that fair value gap. Look, this is the fair value gap. This week has traded that gap. For the sake of this conversation, just think that this candle closed here. It's not a wick. There is a body. It wouldn't be a valid swing high for shifting market structure. As this is a wick, what do you know about the wick? Wick are the inefficiency. This is also a gap. Bodies are not a gap. This is a gap. So there is the real gap. Then market made another gap. Both of this gap has been traded by this gap. But if this candle has traded until this area, okay, market closed there, body is there, still this gap is valid, but you can see that it didn't take that high. That means it didn't trade that fair value gap. If the body was there, then I would say that okay, it has traded the body, didn't trade the fair value gap. But as you can see, this is a wick that has traded this fair value gap, not the body. Then this market came again, trade that inefficiency or the gaps around this area. It is a valid swing high for shifting market structure. Around the morning session, I told that this is the best 22 YT model. It should work. That was the gap. Trade that gap, spent a lot of time, and finally gave you the profit. If you remember the morning session, a perfect 22 YT model. There can't be nothing more beautiful than this. This is the most beautiful 22 YT model. Market came here, cleared that area. I would love to talk about this inefficiency now, which I have marked as a first presented fair value gap. I marked it as a first presented fair value gap because there is a very small inefficiency, a very small inefficiency. Now, if you add the volume imbalance from here to here, it's gonna be a very big fair value gap, right? From here to here, this whole area, it's a very prominent fair value gap. If you add the volume imbalance over here. If you watch ICT's last video where ICT told that he doesn't want to mark this gap as his first fair value gap. Why? Because it doesn't look like very prominent fair value gap to him. I am talking about this from the beginning of the first presented fair value gap. Even ICT when started to talk about this first presented gap, I told that these type of gaps are not valid to me. Even there is a gap 1 handle, 2 handle, 3 handle, 4 handle, I don't like to mark them. I love to mark the gap that has to be at least 5 handle. That is my first presented gap, which is prominent to me. That was my point. Now, people didn't like me. People didn't give me a shit. They started to talk a lot of bullshit over there. I don't care about them because gradually they're seeing that whatever I told them, it's not illogical. That is the logics. That is why I decided to use a gap as a first presented gap, which has to be from week to week at least 5 handle. Otherwise, if you would love to use the week, okay, so for example, there is a gap, there is a gap. It's more than, it's a very prominent fair value gap because with the volume imbalance, it's a very prominent fair value gap, and you guys really would love to use that. There is nothing wrong, as ICT told. If you would love to use it, there is nothing wrong. Of course, you can use it, but I prefer to use this one as my first presented fair value gap, as it is more prominent from week to week and very easy to mark. That is why I would love to go for this as my first presented fair value gap. I mean, the source is ICT himself. If you would love to watch his last video uploaded to his YouTube channel, you can watch it and you will see that I'm not lying to you. This market finally trade that 50% of that first presented gap. I was looking for buying opportunity. After this happened, we didn't find any trade. I had an opportunity over here. That same brother who asked me why this high is valid swing high, he asked me as well why this swing high is a valid swing high. If you were with me, I told that it's not a Mark 22 YT model. If you'd love to mark the 22 YT model, you can mark this high has been shifted over there. I'm not interested to take this buy from here, which is too far from my chart. So I would love to take my entry from this area by depending on by that order block. So that order block was my confluences around this area to take that buy. I never told that it's the 22 YT model. It's a valid market structure shift. You guys can check it yesterday's morning session. So I wanted to take it. I told that if I don't take it, I'm not a trader. Okay, so I should take it, even though I didn't have any plan to take it, but I wanted to take it because it was a very prominent entry for me. Just market didn't give me the entry opportunity. So unfortunately, I missed this trade because market didn't give me the trade. Whatever it is, that was depending on that area. Now look what happened exactly over here. When this market has fallen around this area, then inside the lunch hour, around the lunch hour, what was that? Clean lows. Okay, that was the clean lows here. This is a low, this is a low. What do you see this two low? This is called exact low. Market never leave the exact low. See this exact high, two swing high has made exact high, not sideways candle. Two swing high has made exact high. Two swing low has made exact low. Market take that exact low, then went higher, consolidate a bit over there, and then around the PM session, I was in front of my chart. I was looking for a buying opportunity. So I have seen that okay, market is actually taking swing highs, and then it started to fall. All of this fall I was watching. Now my question to you, what did I say? Look for the buy. It can maximum fall where? Until this area, because this is the last parameter from the hourly chart. Look for the buy only. Here, when this market is falling, you guys are getting very depressed. Oh man, I'm missing this trade. No, you have to stay with your understanding of the price action. So whatever you have done at the morning session, the analysis, if it is a false or I mean bad idea, the bias is wrong, your bias is wrong, that means you're not going to trade, you're not going to frame the sell. You are not a trader who is going to take sell and buy, sell and buy, sell and buy, sell and buy. Don't do that. Strict with your analysis. If it doesn't give you the price action according to your analysis, don't trade in that day. So I am talking about myself. I'm watching, I'm waiting for a buying opportunity. Look, when this market started to fall, I'm ready to go for the trade from 1250 from this candle. So I'm interested to look for a buy from this candle. Is there an opportunity to take the buy? Is there a valid 22 YT model until that fall, that fall, that fall, and finally here? Until here, is there a valid 22 YT model over there? Do you see any? I don't see any. Just no buying opportunity. So I'm seeing this market is falling and I'm happy. I'm feeling good. Why? I'm getting more area. You know, this is the buy side liquidity over there, and I'm now getting a huge range. I know that I'll be able to make a lot of money over there. So finally, this market has fallen to that last fair value gap. What else do I have over there? The upper quadrant of the daily premium week, last fair value gap from 15-minute chart. I have this upper quadrant level as well. Tap to this upper quadrant, respected the sorry, not upper quadrant, the minus 1.5 standard deviation, respected by two candle. Next candle closed below this minus 1.5 standard deviation. Trade that minus 1.5 standard deviation. Fall exactly to the low of that 15-minute last fair value gap. You are immediately marking what do you have over there from 15-minute chart or hourly chart. You are just going to mark them, right? So you have found that, oh wow, it has perfectly tapped to the low of this 15-minute last fair value gap. What did I show you? The last down close body close candle, which has traded a very obvious fair value gap, is your best order block. This is called the best order block. Mark the order block over here. Just let me remove it. Mark the order block open. Mean threshold of that order block. This candle has validated the order block. Tap to the order block again. Reached until the mean threshold. One body has closed below this mean threshold. The very next body has closed above this mean threshold. Went higher, came until the 1 minute last fair value gap. This is the 1 minute last fair value gap. This is the 1 minute, sorry, 1 minute last fair value gap. This is the 1 minute, what to say, I mean, the entry fair value gap. If you are able to take a buy from this order block, let's go for this, okay? So you have taken a buy from this order block. Your stop loss has to be below this order block. What else can you do? Low rejection. What can be the rejected? The constant encroachment rejection. The 50% of the last fair value gap rejection, right? That is obvious. So you can simply cover that last fair, I mean 50% of that fair value gap, because you have seen the low rejection. The next rejection will be either from to the 50% of this last fair value gap or to the top of this last fair value gap. Remember that things. Low rejection, either the consequent encroachment rejection or to the top rejection. I don't know which one is going to be rejected first, but either of them will be rejected. Take the entry from the order block open, as it is a highly volatile area. So you can take the entry from there. Stop loss, cover the wick a bit. So not exactly to the 50%, just cover a bit, or the whole order block, whatever you want. I would love to go for that area. 23 handle part, I mean, sorry, 23 handle risk. Take partial to this minus 1.5 standard deviation. Close your trade to the entry fair value gap, because that is the most obvious fair value gap. Without any kind of 15-minute bullish fair value gap, you are trying to take the buy. So you have to respect the entry and last fair value gap from 1 minute chart. So until this area, which is kind of 32 handle, 32 handle, and later market actually went a bit higher. I don't care about that. First opportunity from the order block. What you are looking for? Only buy, no sell, only buy. Okay, brother, you told that to wait for the 22 YT model. Look at this high. This is a very nice swing high, right? A very beautiful, nice swing high. Market structure shift by that candle, entry fair value gap, breakaway gap. Take the entry from the top of this fair value gap, which is the entry gap. Put your stop loss below this low. How much is going to be their stop loss? From here, sorry, from there to there, just two tick below the liquidity taken. Okay, so it's gonna be something like how much it's gonna be, like, not from there, sorry, my mistake. Entry fair value gap is over here. This is the entry fair value gap, this is the low of that gap, kind of 50 handle. If you would love to take this entry from this what to say, I mean, the 22 YT model, you have to take that 50 handle risk, and your partial has to be to the low of this new week opening gap. That should be your low. So you are taking the entry to the top of this minus 1.5 standard deviation, because the minus 1.5 standard deviation is aligned with the entry fair value gap to that specific 22 IT model. So I'm going to show you from here to until to the low of this new week opening gap is 21 handle partial. You have to take the partial over there, and then you can hold your trade as long as you want by putting your stop loss to the break even. Maybe you will get stopped out over there. Okay, so first opportunity depending on the 22 YT model. I'm coming a bit earlier here. What market has done? Entry fair value gap and the breakaway gap I keep over there because market has done a lot of things over there. Order block mean threshold, I will keep all of them until here. Now let's look what happened over here. This market came to this entry gap, come back to this breakaway gap, go back again to the entry gap, build the buy side liquidity. Why it has built the buy side liquidity? Because this market is a bullish market. Finally it has to reach all of this buy side liquidity. So what it is going to do, it is going to engineer the liquidity inside the entry gap. Remember, entry gap can be used for the first time, it can't be used for the next time. That means this is the first time market has used the entry gap. Okay, fall, respect the last fair value gap or the breakaway gap, went higher, respected this new bearish fair value gap as well as minus 1.5 standard deviation after building the buy side liquidity. Look at the reaction from there. Perfectly fall, take that low. Look, this low has been cleared by this area. It has cleared this low. But remember, this low can't be taken. Why? Because it has been respected the low of that 15-minute last fair value gap. If this low is taken, that means whole balance or whole price action is going to be collapsed. Nothing is going to be safe over here. This low should not be taken. It is called the origin low. The whole fall stopped over there, right? The whole fall stopped by that low. If this low is taken, the origin all of this buying opportunity is going to be collapse. You can't frame any kind of buy anymore. Market came back again here, cleared that low. It left the liquidity here, took the liquidity there by the body close. Look at the bodies, how beautifully it has cleared that low. Trade the upper quadrant of the daily bullish fair value gap. This market went higher again over there around this level, which is the last fair value gap from 1 minute chart as well as minus 1.5 standard deviation. Left the buy side liquidity over here. What happened over there when it left the buy side liquidity? The highest up close body close candle, you can of course use the both of this candle as your reference if you want. I'm going to just mark this one because if you mark both of them, it is also going to give you the same information. It has been traded over here as a propulsion block. This propulsion block has been traded over here while market left the clean buy side liquidity over here. Order block from the entry fair value gap, leaving the last buy side liquidity, made another last fair value gap below this liquidity. Remember, this is the liquidity. Below this liquidity, made another last fair value gap. Trade that propulsion block here as well as minus 1.5 standard deviation from 15-minute chart. You will be able to see that so beautifully because it is too clear over there. It's very simple to see over there. Fall again, came back again, took that lows again. It is the obvious liquidity because this low has taken over here by a shallow run. It is called obvious liquidity. If the obvious liquidity take by another shallow run, that means the liquidity is gone from there. A very specific information. Took that liquidity, went higher. You can mark this as your market structure shift. This is the fair value gap. You can go for the trade from there. I have no problem, but this swing high is not valid for shifting market structure to me. It is not shifting market structure. I have seen it has cleared the liquidity. Trade the 50% of that gap from 15-minute chart. Remember the 15-minute chart? Top constant encroachment rejection, top rejection, constant encroachment, low, top constant encroachment rejection. This is that constant encroachment rejection from the 15-minute chart. Finally gave me the market structure shift. You can use this market structure shift, you can use that market structure shift, up to you. I have no problem with that. Finally, okay, valid perfect 22 YT model supporting by 50-minute last fair value gap after clearing all the liquidity. No liquidity is left over there. Upper quadrant has been respected, constant encroachment has been respected, gave me the 22 YT model. I'm looking for the buy. Market tapped to this fair value gap, immediately went higher. Where did it came? Exactly to minus 1.5 standard deviation. This is that same week I am talking about, that same week. exactly come from here. You can look how much is the volatility over here. It's kind of 28 handle, so maybe you'll be able to take some partial, trade that area, trade a new order block which has traded this last fair value gap as well as this minus 1.5 standard deviation, trade that order block, send the market lower again, trade new bullish fair value gap. What type of bullish fair value gap is that? Why you are saying that this is the bullish fair value gap? Market doesn't need the perfect market structure shift. I need it. Market has shifted the market. The lowest down close body close candle which has traded this fair value gap is going to be my order block. Trade that order block, respected that mean threshold of that order block. More importantly, tap to the top of this 15-minute last fair value gap for the last time. For the last time, trade that on, made another lowest down close body close candle which has traded the fair value gap over here, order block around this area, trade that order block, made a fair value gap which is here, middle order block. This is the middle order block. I have actually write it down here. You can see middle order block, as well as this is also the 50% of that immediate rebalance week on my right hand side. Immediate rebalance week. This is that 50%. Okay, it is not valid yet. When this candle will close, then it will be valid. Finally, the 15-minute candle has closed above the minus 1.5 standard deviation. Guys, I will take just 2 to 3 minutes, just 2 to 3 minutes before the night. I mean, before finishing this one. I'm try my level best to finish it. I mean, to go faster. Okay. Finally, market has closed above this line from 15-minute chart. Come back again. Fill the unfilled gap. This I wanted to see unfilled. Trade that minus one. I mean, 50% of that premium. Sorry, immediate rebalance week exactly over here. Went higher, cleared that buy side liquidity that is been left over here. This is that last parabolic from 1 minute chart as well as the new week opening gap. Okay, so it has traded over there. So if you are looking for the buying opportunity, I have actually left a lot of information over here. I had no option because I have to catch the market. First opportunity from this order, I mean from this parabolic gap. Now I will show you the execution. Uh, I pushed the button here when it actually went above the 50% of this gap. I pushed the button over there. My stop loss was below this low, and I took the partial here. You can see to the low of that new week opening gap. Took the partial over there by trailing stop loss. Put the stop loss just 2 tick below this fair value gap. Got stopped out over there. So that was the entry. The whole price action I observed as I was in this trade. I didn't actually take this trade because I was already in this trade, and that was the trade around the PM session yesterday. A long trade around the PM session. You can see the morning session here, you remember, and then I took the PM session trade around this area. Okay, that was the price action from here, and finally market actually came here. This is the 9:30 open. I had a lot to tell, but unfortunately I don't have the time, so nothing to do. Let's see how it is going to react from today. I have the liquidity actually over here. I forgot to mark. I had marked it, but I removed it later. This is the sell side liquidity. Let's see if it can take that sell side liquidity first, this clean sell side liquidity, and then it can start to go higher because I have a lot of buy side liquidity now. This is that 15-minute last fair value gap from the 15-minute chart. Right now it is respecting this 15-minute last fair value gap around this area. This is the new week opening gap. Until this market is above this new week opening gap, I'll keep looking for the buying opportunity. If it closes below this new week opening gap, then I will try to use this new opening gap to frame my buy, but I'm not interested to take any kind of sell. If any of you are interested to take sell, you guys can go for that. This is the market open, came here. I think it has cleared all of the buy side liquidity, finally cleared that obvious sell side liquidity here. This is that obvious sell side liquidity. Right now market is trying to trade the minus 1.5 standard deviation. This is that premium week, sorry, immediate rebalanced week, which has been traded the lower quadrant, the 50% as well. Here 50% lower quadrant, tried to trade the 50% here, failed, and then market went higher. So any kind of buying, I want to see it will work as a support. would love to go for the regular trading hour to see if there is an opening gap. Okay, there was an opening gap actually. Market has perfectly closed the opening gap. I don't need to mark the opening gap at all as it has been cleared. Okay. So I'm more interested to think about a buying opportunity. Market has cleared the sell side liquidity. That was obvious for me from the London session. Here, that was the sell side liquidity. Market left. London session buy sell. I mean, buy was here opportunity, but I think there was no opportunity. I don't know what happened around the London session. So finally, the liquidity has been cleared. Market fall. Trade that upper quadrant. Remember the very important level to me from the upper quadrant. Let me check if I do. I have anything from the hourly chart. I have the hourly bullish fair value gap as sorry bullish order block as well. You can see this is the lowest down close body close candle. We just traded this the last fair value gap. It has traded that order block. Now, if it started to go higher, any kind of buying opportunity, I'll take that buy from to the top of this new week opening gap. I'm not interested to take any kind of sell. Whoever would love to take the sell, please go for that. There you go. Let's wait for the buying opportunity. Where do you have the buy side liquidity? I have the buy side liquidity so far here. I'm only interested to look for the buy side liquid. I mean, say the buy. Okay, this would be the best order block to take the buy. It's not the best order block. Why? First of all, it is inside the new day opening. Sorry, new week opening gap. You can see here, it's inside the new week opening gap. I'm saying it could be the best order block if there was no new week opening gap. Why? Because it has traded the new day opening gap. So the very next candle will close out this line. It could be the best order block if and only if there was no new week opening gap. But maybe it will work. I don't know if it will build as a order block. It will work. I believe so. But not interested to take the buy from this order block as it is I both below the 50% of this new week opening gap and below inside the new week opening gap. So if it was above the new week opening gap, that would be the best order block for taking the buy. Hey Marco, it's 100% sell. Please go for the sell. Whoever it would love to take the sell, I really appreciate those people. I'm not interested to look for sell. I am only interested to look for buy. Those people who would love to take the sell, please go for that. Hey Jamie, good morning, brother. I had a lot to talk. I had a lot to talk, but unfortunately, the time, the load shedding actually messed up everything. So I had to finish it faster. I missed a lot of information, unfortunately, guys. Sorry, because of the time, because of the, I mean, market open, I was not able to explain them. Can you repeat, please? Where is your order block? Thank you. Which one, brother? Posted sale in Discord. So you have taken the sale already? After the 9:30 open, did you take entry before the 9:30, Marquis? Oh, okay, it's before the 9:30. That's cool. Valid swing high for shifting market structure. Remember, it's not the order block anymore. Valid swing high for shifting market structure. All I need to see if the fair value gap is above the new week opening gap, constant or not, to take this buy. Can you give me the book to read all these terms, info, please? Just me, I really didn't know what you are referring, brother. Tap to the upper quadrant of that immediate rebalance week. This is that week. Okay, tap to the upper quadrant, respecting the high, sorry, the minus 1.5 standard deviation. Just look over here. Respecting the 1 - 1.5 standard deviation, tap to the upper quadrant of that immediate rebalance week. A valid swing high for shifting market structure. Where do you get to learn these ICT concepts? I learned it by myself, brother, by studying these concepts months after months after months after month. The way I'm studying, see this quadrant level, weak quadrant level right now. I did everything I'm saying step by step, and it takes month after month after month because there was no one to answer my question. So it takes a long time for me. Must we use this all this annotation? Is that a question or are you saying me? By the way, guys, I'm looking for sell. That doesn't mean you have to look for the sell as well. If you find us, sorry, I'm looking for buy. That doesn't mean you have to look for the buy as well. If you find an opportunity to take sell, please go for that. Today is also the same kind of condition. This guy is bullish, and ES and the NQ is bearish. I think NQ is consolidating today. No, it's also bearish. Okay, a perfect valid swing high for shifting market structure. This one. See this week. If this candle could close exactly to the top of this week, and that week would be the same kind of week. I could use the quadrant level of that week. If this candle could close exactly to the top of that week, okay? So that would be the same kind of week. You have seen I have marked over here. Came back again, tap to the minus 1.5 standard deviation. Let's see this should start to go higher now. Market, there is the 8:30 open. This is the midnight open. You see this line? I'm talking about that line. Look at this line. This is the midnight open. This is the 8:30 open. Market is below both of this line and that line. So it is in deep discount right now. Look at the reaction of the upper quadrant of that immediate rebalance week. Reaction from the low, reaction from the 50%, reaction from the top. Is there anything left? Nothing is left. Low, constant encroachment, upper quadrant. Everything has been traded. There is nothing left. It should start to go higher now. It's a question like, must we learn all those quadrant levels? Brother, it's up to you, man. I told that ICT has started to talk about this quadrant level, so I'm studying them. If you feel good, then study them. It's up to you, man. If you need the deep price action, then of course you have to study them. You have all of this annotation on your chart. I don't want to see this body will close below this new week opening gap from 15 minutes. I don't want to see that. Until now, this is a valid swing high for shifting market structure. The best swing high for shifting market structure for best 22 YT model. Look at this high, okay? Oh, okay, actually it closed here. If it closed there, then I would be able to use this quadrant level from that week. As the body has closed here, sorry, closed there, so I can't use this quadrant level anymore. When the first body will close here exactly to this line, I will use this quadrant level of that week to understand the fall maximum until the lower quadrant of that week. If the body close exactly to this line, I didn't want to see that this candle is going to close below this new week opening gap, but it has closed below this new week opening gap, respecting the new day opening gap. So still it is valid. I have another PD array over here. Both of them are kind of same kind of thing. Okay. 15-minute last fair value gap. I am not going to mark it. You guys can mark it. 15-minute last fair value gap over here. Just mark it to your chart. Trade the 15-minute last fair value gap over here. This is that week, brother. I have explained why I have marked it, but you have to watch it after the stream. You can watch the first part. Why this week quadrant level is important to me. So you can watch it after the end of this session. If any of you are interested to look for sell, please go for that. I am only interested to look for buy. I'm watching this line actually. See this line minus 1.5 standard deviation on my 50-minute chart. How beautifully it is respecting the minus 1.5 standard deviation. I really love to see this. If it keep falling, I will do nothing over here. Simply, I will do nothing over there. I don't see the Asia session liquidity lucky star, brother. So maybe it will take, maybe it will not take, but I don't see it. Still look at them. This swing high is not valid anymore as a perfect swing high for shifting market structure. Why? It has made was a swing high here. It has made another swing high here by confirming this body close around this area. It's not a valid swing high for shifting market structure anymore. Hey King Julian, if it keep falling down, then you can please frame the sell setup, okay, brother, and let us know where is your sell. We'll actually celebrate your boom, brother. I really appreciate it, guys. Whoever is looking for sell, please frame the sell setup and let us know where is your sell exactly. August should be avoided. January should be avoided. January and August should be avoided for trading, brother. No trade is valid from 16, 17 or 18 December to second week of February. No trade is valid. And August last week has to be avoided. You can trade the first 3 weeks, but last week has to be avoided. Brother, I just told that I don't know where is the Asia low. I don't see, I don't look at them. Maybe it will take that Asia low. I have no idea, but I don't look at the Asia session liquidity. I don't look at them. My liquidity was here, that has been cleared. The liquidity has been cleared to me. So all I'm looking for now, any kind of buying opportunity. If I get a buy, I'll take that buy. No sell is valid. At least not for me. Anytime it will provide me the buying opportunity, I'll take that buy. See this 15-minute last parallel gap, it should not break this last parallel gap from the 15-minute chart. This one. I'm watching this quadrant level as well. So it has traded here, traded the upper quadrant. Now it is trading the lower quadrant. I will just see how it is going to stop them, if it can stop them. If it doesn't and go for the low, I really don't want to claim any sell. There is no sell valid to me. When it is falling, it is my buying opportunity. For the first time, I'll get a buy. I'll take the buying opportunity. I'll take the buy. If I don't get the buy and it keep falling, I'll let this session go. I will not take this trade, any kind of trade around here. If it keep falling. All I mean that I'm not interested to chase the market. Market open here, fall, fall. Any kind of selling is kind of chasing the market. I'm not interested to chase the market. It's my new buy side liquidity here. Going to remove this sell side liquidity. It will keep falling. I will do nothing. I will wait. I will keep waiting, keep waiting, keep waiting for my entry opportunity. If the entry is not there, I'll not take any trade. Whoever is willing to take the sell, go for that. I'm really tired to show you that how to wait for the setup, and then when the setup is over there, how beautifully it worked 100% of the time. Not 100% of the time, most of the time. So you guys have to be patient. Yes, sir. Bias is bullish. Every day's bias is bullish. There is no selling. As the market is around all-time high, there is no sell until the market is going to give a bearish fair value gap from the daily chart. There is no sell. This is that same upper quadrant level, as you can see here. Upper quadrant level. Yesterday was an inside candle, if I'm not wrong. Yeah, yesterday was an inside candle. I can expect some kind of expansion today. So even though this market went a bit lower, I'm still interested to see the expansion toward the buy side liquidity. came to this upper quadrant of that premium week. Let's see if it can go higher, or does it want to take previous day low, trade that 50%, then this low, then trade the lower quadrant of this week, then would love to go higher. I don't care. I will only take the buy. If the morning session doesn't provide me the buy, I will wait for the PM session. But no sell is valid until from this daily fair value gap, sorry, daily chart, there is a bearish fair value gap. I will not take any kind of sell. This quadrant level is now working as a resistance over here. Let's see if it can break them as well and then start to go higher again. It has been worked as a support until now. It has worked as a support everywhere, and now it is working as a resistance. Okay. Good morning, news at 10. We have already talked about that. No, 10 a.m. news is important to us because 10 a.m. news doesn't have any uh, importance. Those type of news, home sales or this type of news doesn't have any relationship with the with this market, like something like that, because they're the medium impact news. I think it's the home sales news, if I'm not wrong. This is not a valid swing high for shifting market structure. If the body close here somewhere, now it will fall and closed here somewhere, then this will be a valid swing high for shifting market structure. But body has to make sure that it's not sideways candle. There is a swing. Okay, there is a this kind of swing. You will be able to mark it like a pyramid, like this. Otherwise, this is not a valid swing high for shifting market structure because they are the sideways candle. Even though I'm looking for a buying opportunity, I'm not going to force the market. Good morning, MB trader. Tamimi, 10 a.m. EST, new home sales, orange folder. Thank you, brother, for confirming that. Good morning, Gangjam. Better wait for longs above new week opening gap. If I can find a buy here, for example, there is a buy here, I will look for the range. Maybe this there is a buy from here to this low of this new day opening gap. Is that at least 20 handle? Yes, that is more than 20 handle. I'm good to go to take the buy. Why? Because I'll be able to take a partial around here. But if there is a buy, for example, the buy is here. So here to here, the range is 7 handle. I'm not going to take the buy here because I'm not able to take the partial to the low of that new day opening gap. So I'll not take the buy from that area. In that type of situation, I will wait to market give me the opportunity above the constant reinforcement of that new week opening gap. I'm only interested to look for buy. Whoever is interested to take the sell, I really appreciate those people. Take the sell. Let us know where did you take the sell, and if it is a boom, let us know as well. Would love to celebrate your boom, brother. We have to go. We have to go through all of the price action here. What do we see so far? From 15-minute chart, we are seeing that the bodies are respecting this area. This so far it didn't close actually below the lower quadrant of that immediate rebalance week. So it is respecting the low of that lower quadrant of that immediate rebalance week. From 1 minute chart, we can see that it is respecting the upper quadrant of the premium wick of the daily fair value gap. And from 1 minute chart, it is respecting the 50% as a resistance from the immediate rebalance wick from 15-minute chart. So far, it is kind of, I can say that this is the one who is holding the market. More importantly, the last fair value gap from 15-minute chart is holding the market. As I told, this low should not be taken. If this low is taken, the whole concept is going to be collapsed. The buying concept is going to collapse if this low is taken at the beginning, the way I told you that. Okay, but I have to check that if this low and that low has made the clean lows. No, it's not the clean lows, but it has left some sell side liquidity here. Okay, perfect lows. So this is the news candle. I don't think so there will be any volatility around 10 a.m. because these home sales, actually crude oil home sales, they don't have the impact on the NQ market most of the time. Oh, sorry, I forgot to talk about this candle. After a long period of time, it came back again to this fair value gap. Remember, for the first time, it came to this last fair value gap. What did I show you? Order block, mean threshold of the order block, the best setup from order block, one of the best setup. After a long period of time, market came back again to the same fair value gap. Same thing happened. The lowest down close body close candle has been validated as an order block from this candle. Mark the open because the range is a bit more range. Mark the open of that order block. See how many handle it is going to provide you. Something like that. As this market has traded the 50%, so you have to cover the low of that fair value gap, or at least 2 tick below that low. That has to be covered by your stop loss, at least the low that has been built as an order block. So this candle has validated the order block. The next candle tap to this order block. You can look for the buy side liquidity here by taking some partial wherever you want to take that partial. In my opinion, the best is to take the partial around 20 handle, and then you can hold the trade from the buy side liquidity. I'm not working with this order block, so I'm not framing the trade. I'm just trying to to remind you that to mark one of the best order block from our trading. So one of the best order block. That was one of the best order block. Why? Because it has traded another last fair value gap. But look, nobody has closed above that order block. Nobody has closed. Market fall came here, then validate this order block as an order block, then give you the entry opportunity, and this buy side liquidity can be your target, or maybe above this buy side liquidity 50 handle, something like that. After cleared some partial, maybe you can take the partial around this line, which is minus 1.5 standard deviation, which is also 26 handle. You'll be able to take some partial over here if it provide you, and then you can hold the trade until this buy side liquidity. Hey Vin, I don't like a week on top are watching game today. What game you are watching, brother? It left some sell side liquidity here with a previous swing low. You can see here that is a swing low from 1 minute chart. There is a swing low from 1 minute chart. It has left some liquidity, which is kind of a bearish setup. Bearish liquidity. It can fall to take that liquidity. I'm not interested to frame the sell. I'm only interested to take the buy. If there is a buying opportunity, I'll take that buy without any kind of confusion. This is a valid swing high for shifting market structure, a best swing high for shifting market structure. My question is, if you would love to take a buy from this area, I'm saying here, okay, just saying, If you'd love to take a buy from this area, are you able to take the partial to the low of this new day opening gap? If you are, then take the buy. Otherwise, let this go. Even though this is one of the best 22 YT model, I'm looking for the buy. I have the clean buy side liquidity that I believe will be taken. Still, it is not valid to take the buy from this gap. Why? Because this new day opening gap can stop the market, send it lower. It can happen. Now, it depends on you. Brother, I'm able to put my stop loss here, which is 90 handle, 19 handle. I'm good with that. I don't have any problem if I get stopped out by 19 handle. I'm good with that. And I promise you, brother, I will take a partial around 20 handle, and then I will hold my trade maybe until to the top of this area over here. Then go for the trade. I have no problem with that. Everything is aligned with our bias. One of the best 22 YT model. But the look at the place over here. What is the place here? It is trading the new day opening gap. Are you able to take the partial? If not, don't take this trade. Even if it provide you the entry, don't take it. If you think, oh no, it's good for me, then go for the trade. I have no problem. By the way, I would love to draw your attention over here. Look at this 50% of that. What to say? I mean the immediate rebalance week. Beautifully, body is closed above this line, so it is still respecting the 50% of that immediate rebalance week, but it fall a bit more until the upper quarter of that daily week. Okay? I will just frame this one, but not going to take this trade as I'm not able to take the partial to the low of this fair value gap. So I'm just going to frame it, but not pushing the button. That could be the entry from this setup. Let's see if it can work. Not going to take it because it is now respecting this new day opening gap. Is it going to work? Maybe it will work. Maybe. I don't care. I'm not interested to take this buy because the place it has built, the setup is not good for me. So even if it works, I don't care. But brother, you have very clean buy side liquidity. I don't care, brother. You are looking for buy. I don't care, brother. I'm not going to break the rules, which is more important rather than taking an entry. I don't care what is my bias. I don't care what is the setup. I don't care how beautiful this model is. All I care is this place right to take that buy, or is it not good to take that buy? If it is good, I'll go for that buy. I don't care about my loss. But if it is not good, I'm not taking this buy. That's for sure. If you ask me, is that a valid model or not? Yes, it is valid model. Nothing is wrong over here. Everything is perfect over here. This is one of the best 22 IT model. So according to the model, this is the best. But the place is not good to take the buy for me. I don't know about you guys, but for me, it's not good. For a cricket. Oh, okay. Who is playing today? If I were looking for sell, for example, if I were looking for sell, that candle is the one of the best bearish order block. One of the best bearish order block. If I was looking for a sell. For example, my bias was bearish. This is the sell side liquidity I'm targeting. I could go for the sell from this order block. As my sorry, bias is not bearish. I believe that will be uh, going to be broken and market will go higher. I believe. Okay, but we'll see. India versus Bangladesh. Ravi Parmar, first presented fair value gap delivered again. Wow, I didn't know that. Thanks for Ravi for confirming that. We're near the previous day low. We have to wait what's the next reaction. I don't have any intention to look for the previous day low. It's not important to me. Of course, it can do that, But on Wednesday, Thursday, Friday, Wednesday and Thursday, previous day high, previous day low has no relationship with the price action. Of course, it can take it, but if it takes previous day low, that means it will keep falling. That is one kind of confirmation. One Friday, Wednesday or Thursday, if previous day low or previous day high is taken, that means it will continue toward that way. It's not something it will clear the previous day low and then it will start to go higher. It's not something like that, brother, according to my knowledge. Hey Derek, did you take buy or sell, brother? What did you take? Even if you ask me, I would love to say that previous day low should be intact. That means it should not take that previous day low. If the bias is bullish, if this market would really would love to go higher, then it should not take previous day low. If anyone is in this trade, I don't know if any of you, I'm not in this trade, I'm not interested to take this trade, I can't take this trade. So if any of you are in this trade, as I told, it's up to you, brother. I'm not going to take this trade. Maybe it will work, maybe it doesn't work. I don't care about that. Oh, Derek, you took the buy. Congratulations, brother. From where you did take that buy, brother? I mean, depending on which model you took that buy. How we can identify, seek, and destroy beforehand, other than news event. You have to look for the candle from 15-minute chart. If it is an indecisive candle, that means a small body, longer wick, then it can be the seek and destroy mode. Okay, that means a small body, long wick around the starting of the session. Then it can be the seek and destroy mode or the accumulation phase in that specific day or a specific session. And it has to be from 15-minute chart, not from other chart. Yeah, I've marked all the bicyclicity in a clear way. What are you watching now? Right now, it is respecting the lower quadrant of that immediate rebalance week. This is the immediate rebalance week. It is respecting the market. A valid swing high for shifting market structure. I believe so. Mm, no, I can't use it because this law is not taken, so there is no liquidity taken yet. So I should not use this one as a valid swing high for shifting market structure. If this law is taken, then it is a valid swing high for shifting market structure. Hey Derek, what was your model over there to take the buy? I mean, why did you take that buy? Was there a water block? Was there 22 YT model? Was there breaker block? Was there inversion parabolic gap, mitigation block, propulsion block, turtle soup? What was there to take that buy? Here, market respected the upper quadrant of that daily premium week. Here, market is respecting the low of that immediate rebalance week, lower quadrant of that upper quadrant of the daily premium week. See the beauty. This is the beauty of the quadrant level. I'm happy to me because I'm studying this quadrant level. I'm really happy to see that, to studying this. And thanks to ICT himself because he has introduced this quadrant level in a deep, in a expanded way. I'm really happy for him as well because he has shared these things to me. Okay, I will look for the entry now. If I see the entry is kind of going to support my, what to say, I mean the stop loss, then I will try to take that entry. Okay. Even if there is a one, okay, there is, okay. Even if there is one tick gap, I will try to take this buy. Even if there is one tick, one tick, what to say, I mean the gap. There is no gap, there is no trade. There's no gap actually, unfortunately. No gap, so no trade. Why you are talking about a buy here now? You didn't talk about the buy here, but why you are talking about the buy right now? Here, this market came to this nude opening gap. See, this 15-minute candle, it came to this nude opening gap. Reacted from the nude opening gap, sent the market lower. Now this lower quadrant is respecting. So I was afraid of the reaction from the nude opening gap, which is done already. The reaction from the nude opening gap is already done over here. Now, as it is supporting, I can go for the buy, just believing that this new opening gap is not going to be respected or it's not going to support the market anymore. Okay, it is going to be broken. I believe that that is going to happen, but logic is here. First, I was not able to take the buy because this market didn't came to the new opening gap. It could be respected this new opening gap, could fall, take that sell side liquidity, maybe until here, maybe until there, it could do that. When it respected, sent the market until a very specific level. Look at this level, how beautifully it is respecting. History always repeats. History always repeats. I have seen already the quarter level is respecting here. See how beautifully it is respecting there. It is also respecting here. It is respecting there. So I can believe that now it is the time to be respected. Every single time market will break the level, it will start to respect it. It will be start to respect that on. See, it has closed above this line. Now it is going to be respected by the body. We can go a bit lower, but the body is going to respect this line now. Every single time it is breaking, it is going to respect that on. And this market will take that buy side liquidity. That was my idea for taking a buy from here. Unfortunately, there is no fair value gap. As there is no fair value gap, I'm not taking this buy. If there was a fair value gap, I would go for that buy depending on this information I have just shared with you. My whole setup would be valid from this setup. See, this is the setup where the market has cleared the liquidity, gave me the perfect 22 YT model, fall, failed to take that origin low, which has cleared the liquidity, going to take the buy above this 15, I mean above this fair value gap, not below from this entry fair value gap. That was my plan to take the buy. Look how beautiful it is respecting now. Okay, so I want to see every bullish PDRA is now going to be respected by body. We can go a bit lower, but body is going to respect those lines, and this market will go ahead take that buy sell liquidity. This is just an unfortunate. I don't have the fair value gap. I think I have a fair value gap here. Let me check how much is going to be the stop loss. 11 handle. 11 handle. Good. 11 handle is not bad. I'll go a bit more lower. Just will cover the 50% of that week. Here. 13 handle, I will take the risk. And 21 handle will be my target. Okay, so if it tap over here one more time, I'll take this buy. If it doesn't tap, I'll just leave it. I'll let it go. Because I had to pull the button from this candle when I was explaining the market. As I just missed it, so I'll try to look for, if one more time it come here, I'll take the buy. I'm not taking the buy from this minus 1.5 standard deviation. I'm taking the buy from this gap. There is a very small gap. See this gap? I'm trying to take the buy from this gap. So if it tap here, I'll take this buy. So now it is all depending on the luck. If it come back, I'll go for that buy. I have explained the reason to take this buy. If you ask me why my stop loss is over here, my stop loss is over here just because I don't want it to see this gap will be broken. It can come back again until the 50% of that quadrant level. It is also possible. That is why my stop loss is a bit lower of that 50%. And as you can see that stop loss is actually smaller, like 13 handle, something like that. So I can go for this trade. It again built the buy side liquidity here. You can see here a new buy side liquidity. Look, I'm not putting my stop loss below this low. I'm not putting my stop loss below this low because this is the sell side liquidity. This is the sell side liquidity. There is no logic to put the stop loss below these lines, because if this market really would love to fall, if it break all of this bullish PDRA, that means it is going to clear that liquidity. There is no reason to put the stop loss below those lines. That's why my stop loss was over there. If it doesn't respect this area, I will get stopped out with like 13 handle. I was actually afraid of this week, so that's why my stop loss was a bit lower. We can did the damage, there is nothing wrong. But if it doesn't respect those lines, that means I have no way to hold the trade until this area. That is why my stop loss was over there. If it actually respect here and I got stopped by the week, I'll be really so sad. Okay, because week I was afraid, so I put it a bit lower. But yeah, when the body will close above this line, it's gonna be the water flow. Difficult area to take buy. The reason is it is just below that new day opening gap. My logic was here, it should respect the bullish PDRA. If it would love to go higher and take and clear that buy side liquidity, that is why I push the button. My stop loss was very small. Now, if you don't want to take the entry because it is difficult, no need to take the trade. wait for the candle close above this area, then go for the trade. Or at least let him fall a bit more here somewhere, then frame another buying opportunity, take the buy from there. Because you will be able to take the partial to the low of this new opening gap. Still, this new opening gap is holding the market. Brother who actually told me the liquidity is still over there. Just look at this price action, then you'll get the full setup of everything. This is that market which is bullish. Left the buy side liquidity. See here, the buy side liquidity is over here. Lot of people took the sell around this area. This is the next support zone. Where is that? This is the next support zone around this area. If this market fall and clear this sell side liquidity, what does it mean? That means those people who took the sell here, they are going to clear their entries around this area. They are going to close their entries around this area. Why? Because this is a new support area. Market fall here, made it as a support. Support. This is support. This is support. This market will fall, clear this liquidity. All of them will be profitable. Whoever predicted the all-time high, they are going to be profitable here. I don't want them to be profitable around this area. I just don't want them. I don't want to look them to be profitable around this area. So it should not fall and clear that low. This low should not be cleared. If it clear, that means it will keep falling. Then I have to change the bias. I have to maybe stay out from this market. It's not the order block anymore. Another ugly day. I really would love to see actually, was that my mistake or not? Okay, like if I would put my stop loss below this low, was it a good decision or not? I would love to see that. Okay, just would love to see that. I'm not saying that I should put my stop loss, but okay, that is a good idea. Not put below this area, instead believing this area. I am came back. NQ is consolidating. ES is also consolidating. Perfect. So I have taken a loss for 13 handle, right? Let's mitigate the loss. Come on, where do you want? Friday night, all you want. Leave the dance floor, leave the dance floor. They're respecting. Still, they're respecting. I believe this is the last fall actually. This is the last fall. Now this market will actually start to reverse. I believe so, okay? Depending on the time, because it's already 10:30. We are inside the silver bullet. It should give me the speed in the silver bullet time. So in my opinion, that is the last fall. By watching this 15-minute chart, where I have seen that it has respected the high here, then respected this high here. It went until here, then went through this area and finally tapped to this line. So I believe this is the last time market has fallen. If it doesn't go higher now, maybe it will go higher later someday, not today. It should go higher now. The time is the factor here. This is 10:30. Right now we are exactly around 10:30. It should give me the run toward the buy side liquidity now. One for two so far rate today. Just be patient. You are going to get your all the loss back, brother. Hold your bias. Just hold your bias. Don't switch the bias. Price is respecting. Just look at those levels. It is respecting. A bit messy right now. We will wait to see if it can start to go higher. Before going higher, yeah, it can clear these liquidities, which I really don't think so, but it can clear them. If it cleared them, that means okay, let the day go with the loss. Otherwise, hold the bias. Don't change the bias, please. I am really expecting the run toward the buy side liquidity now, because this is the time it should go for the buy side liquidity. The 50% of the silver bullet, 10:30. By 10:29, 10:30, 10:31, it should give me the sign that I'm interested to go for that buy side liquidity. I'll go for this buy one more time from this gap. If it tap to this gap, going to put the stop loss exactly same here below this area. Just will put it a bit lower because I don't want to see wick is going to damage. The body will close out this line. I'll take the buy. Remember, not the best scenario, but yeah, we'll try to take this buy. We have a loss of 13 handle so far. If the body close above this gap, I'll take the buy. If it doesn't, I'm not going to take this buy. See this candle, I really would love to see this type of candle toward the buy side liquidity, not toward the sell side liquidity, to be honest. I wanted to see this type of run toward the buy side liquidity because it should give me this type of boom or big candle around 10:30. I'll close it right now because the body didn't close. Okay, the run actually I got, but opposite directions. My direction was bullish. It actually went to the bearish way. Not able to trade. We'll wait for the setup. If we get, we'll go for the trade. If we don't get, we are not going to take the trade. Simple, very simple, brother. Love to see how many percentage did it trade of this water block. So this is the mean threshold of that water block. One body has closed below the mean threshold of that water block. Next body is going to close above the mean threshold of that water block. Love to see if it can go higher now by trading that water block mean threshold. We should remove this quadrant level as well because it has tapped to the lower quadrant of that week. Happy to see that. Bias bullish target 24,725. 725. Your bias is bullish, but you are looking for a selling setup. Okay, it doesn't make any sense to me, Mr. Alauddin, MD Alauddin. Just something like that. I think the drawn liquidity is 24,780. It might sweep that and reverse. I have already talked about that. If 780 is taken, it will never go higher. It will keep falling. I've already talked about that, brother. If 780 is taken, it will keep falling. It is not a bullish day today. It's a bearish day. That means if this low is taken, that means I'm my bias is bullish today. I mean, sorry, my bias is wrong today. The body will close above this gap. I will put the limit order. If it tap to this gap, I will take that buy. Here I just covered the 50% of this gap. You can see here. This is the bullish gap. I just covered the 50% of that bullish gap. So if it closes above this line, I'll take the buy from the real 22 YT model until this low is not cleared. This is valid as a buying from this gap. So I'll try to take that buy, but body has to close above this area. Otherwise, no buy is valid. It will keep falling. I'll let him fall. Not interested to take the sell. Market has been rejected from the new day opening gap already. Market has been rejected from the new day opening gap. Also cleared the liquidity. So there is nothing wrong. This is the inducement, in my opinion, where it has started to fall. People started to believe this is a bearish market. So they tried to enter here. And I believe that after this inducement liquidity, market will go higher. Now or never, something like that. This time my stop loss is gonna be a bit longer, 18 handle, as I have to cover the 50% of this gap. It's gonna be a bit more stop loss. So first was 13 handle, now it's 18 handle. Overall 31 one handle will be the loss if I get stopped out. Entry is valid if and only body close above this gap. Then and only then the entry is valid. If it doesn't, I'm not taking the trade. This sudden fall, this sudden fall, it's called the inducement. I believe so. It's called the inducement. That means market has fallen, right? People started to think, oh, it's a bearish market. Come on, man, it's a bearish market. Look at the run. Boom. Take the sell. After this whole consolidation, fall. Take the sell. and I believe that this market will go higher. If it doesn't do that, I will not take the trade. One more time, market came to the constant encroachment of that last fair value gap, came to the exactly to the top of this last fair value gap, which is called constant encroachment rejection, top rejection. The thing I have explained here, if you remember, there around this area. The same thing happened here as well. One more time. Why, brother? You are talking about these lines. Now you are coming here. No, I don't know which one is going to be respected. I will wait for the setup. That's all. If you look for that 22 YT model, this is the low where you should put your stop loss. If you take the entry over here, you have to cover that low of that liquidity taken area. I was not able to do that, so I took my lowest possible area to cover the stop loss, and would love to try try to take re-entry until this low is not taken. If it doesn't go higher, I will not take the buy. Even though the trading here is highly risky because I'm going against the new day opening gap. Just highly risky. As the stop loss is smaller, I'm trying to catch them. Consequent encroachment rejection, top rejection. Nothing is left over here. Just it should start to go higher while it has left the liquidity here. It has left the liquidity there, and I have a lot of liquidity here. There. The bullish market from the all-time high, according to the all-time high, it's the bullish market. Keep falling, will do nothing. I'll just remove it actually later when it will provide me the entry, then I'll actually mark them. If any of you would love to take the sell, go for that. Try your luck. See you tomorrow, brother. We have an SMT now. Would you take buy until NQ is above Monday first presented? That is the new day opening gap. Yeah, it is the best area to take the buy above this new week opening gap. That is the best area to take the entry. Kind of best 22 IT mode. I'll just keep yelling at that. Best 22 IT mode. So for the price is really too messy. It's not moving anywhere. It's just ranging around the same level. Just would love to see how it is going to finish the day, finish the morning session. Check sell side liquidity on the 1 hour. Brother, can you please see that I have marked sell side liquidity around 24784.00. I hope you will be able to see that. This low and that low are clean lows around this area, which is a perfect sell side liquidity. But the problem is, if this sell side liquidity is taken, that means this last fair value gap is going to be broken, and the low of previous day low is going to be taken. That is a sign of bearishness. This is not a bullish market. This is a bearish market. I would love to see it will leave this open over here and it will go higher. It will first clear at least some buy side liquidity. Even if it would love to fall, I don't care about that. It has to clear some kind of buy side liquidity. That's my logic over here. Do you get me? Either way, this market is not moving anywhere. So either way, if you take the sell, you will get a stopped out. If you take the buy, you will get a stopped out. To me, to drop again. Let's see, Marquis. I'm in sell. Shrey Sharma, finally I have found someone who has told that I'm in a sell. Brother, please let me know where did you take the sell, where is your stop loss, and where is your target. Finally, I have found someone who told that I am in a sell. Not like I took my partial, I got my boom, not like that way. Thank you, Sharma, for saying that, brother. Just let me know where is your entry and where is your stop loss. Just let me know that, brother. I would love to celebrate your boom, brother, with you. Same as yesterday, nothing. Until now, it's nothing. True. I agree with you, brother. 24829 is my entry. Okay, 24829. 24829. So I think here 84829. Okay, I'll just put it here. Where is your stop loss, brother? Just let me know where is your stop loss. And I believe that your target is previously low. So here somewhere that is your target. But just let me know where is your stop loss. Thank you, brother, for sharing. 24836, but is break even now. Okay, so you are in break even now. Okay, I'll keep it around the break even. Can we use 50% of the 50-minute candle 945 for reference? See this candle? I'm talking about this candle. We have already shown that to you. It has tapped to the lower quadrant of that week. Let me show you one more time. From here to here. If I divide it into the quadrant level, see this is that lower quadrant where market tapped to this lower quadrant, respecting the upper quadrant by the body. This is that upper quadrant by the body. It is respecting and tap to the lower quadrant, which is aligned with the last fair value gap top. So I have marked it actually, but you see a lot of lines over there, brother. So I actually removed this quadrant level. But we know that it has tapped to the lower quadrant. Okay. So let's see if it can close above this line. If it do that, I'll take the buy again. If and only if this low is taken, more importantly, the previous day low, I'm not interested to take any kind of buy anymore. We'll cover same areas, this fair value gap, which is now going to work as an inverse gap. We'll cover that area. Target will be here. This buy side liquidity, I'll try to take the partial around 15 handle. Okay, now you will complain that no man, 15 handle, it's not acceptable. I have to take it because this is one of the most important level. I have to take it, and I have a loss of 13 handle. So I will hold it until that area. This is that 22 YT model from the beginning, which is still valid. False alarm, need to close below 24804 to create 15-minute order block. Oh, okay, it didn't create the order block yet. Yeah, it didn't create the order block yet. I agree with you, brother. So most welcome, Jamie. Mean lower quadrant still bullish. Absolutely, brother. By the way, I don't know Suresh will be able to stay in this trade or not. Maybe he will get stopped out. I don't know. Suresh, I believe that, brother, you have taken some partial. At least you have taken some partial because this market actually moved a lot. So if you took the partial, I'll be very happy. 35 handle partial opportunity you had. So I believe you have taken some partial. If not, then nothing to say, brother. Anthony, okay. Anthony, what did you say? Stop loss 24792. 792. Did you take the buy or did you take the sell, brothers? Anthony. I mean, you just told that your stop loss is over. So I'm a bit confused, brother. Look like inside day. It can't be inside day. It should not be inside day, but yeah, it looked like an inside day. But it should not be inside day. Today is the Wednesday. Wednesday should be the expansion day, even though we have found the expansion one Monday. So it can be expansion day, but I don't think so. It is gonna be an yeah, inside day. Let's see if the body can close above this line. I'll put the limit order. All I need to see the body close above this line, above this gap. This time stop loss is gonna be a bit more longer. Nothing to do actually. Wow. After this line, which is minus 1.5 standard deviation, it will start to fall again. Oh man, very bad time. Buy. Okay, yeah, Hanif, you are in a buy. 24,848 is your target, I guess. 24,848. Okay, so that buy side liquidity. I hope, brother, you will get your boom, brother. Yes, and Stresh, I think you got stopped out to the break even. Brother, did you take the partial? I'm not sure it has closed over there or not. Oh, it didn't close actually. I think I'm going to miss this trade. I need to wait for the body close above this gap. Otherwise, I'm not going to take this trade. So body close, then I'll go for the trade. No body close, no trade. Oh, okay, you didn't take the partial. Okay, at least you got the break even. Congratulations, brother. At least you didn't take any loss. Happy. This is a happy, happy moment. No profit, no loss. Come on.